It's very easy to be influenced by the noise of the market. If I answered the phone for every stockbroker which called and read every piece of research coming out of the broking community, I would not have time to do any of my own work. I like to focus on, first of all, the ideas that we've already got in the portfolio, making sure I'm on top of any risk associated with those positions. And the second thing I like doing is obviously focusing on new ideas which I could put in the portfolio to make money for our clients.
So we avoid being influenced by all the noise in the market by following, understanding and visiting individual companies. We see the management team of these companies, we see them year in, year out. That's all our analysts do. So when the macro, and a lot of the investing world is focused on the macro and on what central banks are doing and what liquidity is doing and what overseas markets are doing, by visiting and understanding companies really well, we can actually use the macro volatility to then source opportunities to build positions in quality companies for the long term.
How I avoid being influenced by the noise in the market is having a proven process that you feel comfortable implementing and you have confidence in. And then the second thing is doing the necessary research and analysis to actually understand the risks that you're taking and to provide, price it correctly.
The best way to avoid the noise is to stick to your fundamentals, stick to your analysis, try and focus on the fact that stocks are actually really businesses. Businesses have up and down times. If all we're seeing is good news after good news, you've just got to remind yourself, hey, things can be bad. What does this business do when things are bad, when their revenue isn't so good? And remind yourself of what a fair intrinsic value of the business is despite the noise going on in the market. That's probably the best way to try and look through the noise, so to speak.